Hi, I'm Seth from Citizens Disability, America's premier Social Security disability advocacy group. One of the most common questions we get asked is, what's the difference between SSDI and SSI? It's easy to get confused by them because their names are pretty similar. They're both run by the Social Security Administration, and both programs are designed to help people with disabilities. And though both are helpful, they're very different. I'm going to explain each program in more detail in a minute, but first let me give you the short version of what each program does. SSDI, or Social Security Disability Insurance, is for workers who have paid into Social Security through their regular paychecks, and it's for workers who can demonstrate disability. Now, in 2019, SSDI will pay out on average about $1,300 per month, up to about $2,860 per month maximum. It can also provide access to Medicare as well. SSDI is what's called an earned benefit. You have to have paid into the system to get benefits out. Now, SSI, or Supplemental Security Income, doesn't require a person to have worked in order to qualify. Unlike SSDI, Supplemental Security Income eligibility is based on your current income and your current resources, not how much money you have earned in the past or how long you have been working. The monthly maximum payment for an individual in 2019 for SSI is $771 per month. Some people will qualify only for SSDI, some will qualify only for SSI. Some people can qualify for both. Are you confused yet? Don't worry. I'm going to break this down all for you in more detail. So SSDI, as I mentioned, stands for Social Security Disability Insurance, which is the program that provides the monthly payments known as Title II Workers' Disability Benefits. The vast majority of working Americans, whether they realize it or not, are buying disability insurance with every paycheck. If you look at your pay stub, you might see a deduction labeled FICA. A portion of that deduction goes to Social Security retirement funding, and a portion goes to paying for, and you probably guessed it from the name, insurance to cover you in case you become disabled. By paying into Social Security, you're buying insurance from the government to help you if you ever become disabled and can't work anymore. But just having paid in doesn't guarantee that you'll receive money when you decide you need it. If a person becomes disabled, they need to file a claim for their benefits, and the Social Security Administration needs to determine if that person is qualified to get payments, and also needs to determine if they're disabled enough that they can't work to support themselves. So in order to qualify, the Social Security Administration needs to see that you have enough work credits. These credits are earned by paying into Social Security for 20 of the last 40 fiscal quarters before you became unable to work. The easy way to think of that is to say, have you worked for at least 5 of the last 10 years before you were forced to stop working? If you have, then you probably have enough work credits to qualify. You also need to have a recent enough date last insured. That means, were you earning money and paying into Social Security recently enough to still be covered? And again, that 20 quarters out of the last 40 quarters thing comes into play. To be qualified for SSDI, generally, you need to have become disabled and applied for SSDI within 5 years of when you last worked. And finally, you need to demonstrate to the Social Security Administration that your conditions, which are technically called medically determinable impairments, you need to demonstrate that they are severe enough that they will prevent you from what the SSA calls sustaining work. And that's a big topic all by itself. We'll cover that in other videos, and we have plenty of articles about it on our website. The short version of that is that you'll need medical evidence to prove to the SSA that your impairments are severe, by the SSA's definition, and that they will limit your ability to function in a work setting, and that the disability will last for at least 1 year. Now, as I mentioned, SSDI in 2019 pays out, on average, about $1,300 and change per month, with a maximum of about $2,860. SSDI recipients can qualify for Medicare. And the other nice thing is that if you have to wait a long time for your benefits, and you should know that most people do, the Social Security Administration will pay you retroactively back to the date of up to 1 year prior to the application date. Now, the application and qualification process for SSDI is pretty complicated, and it can take a long time. At Citizens Disability, we help people file their claims and win their cases in order to get those benefits. We have a ton of articles and videos on our website that explain how the process works if you want to learn more. But now let's take a look at SSI, or Supplemental Security Income. As I mentioned previously, this program is based on your current income and your current resources. You don't need to have a work history, and you don't need to have paid into the system to qualify for SSI. You still do need to demonstrate through medical evidence that you are disabled by the Social Security Administration standards. The SSA will also look at how much you or your spouse are currently earning and at your current resources, such as your savings, cash on hand, or any stocks or bonds you might own, things like that. The SSA will determine, based on how much you're earning and how much you have, whether or not you're eligible for those benefits. Typically, to qualify for SSI, an individual is limited to having no more than $2,000 in disposable assets, and a family is limited to $3,000 in disposable assets. The calculations are pretty complex, but in general, the more you earn and the more you have saved, the less your payments will be. The maximum monthly payment in 2019 for SSI is $771 per month for an individual. The other nice thing about SSI, though, is that if you receive SSI, you'll also be eligible for Medicaid, and you may also be eligible for SNAP, or the Supplemental Nutrition Assistance Plan. So that was the long version. The key things to remember, though, I'll give you the short version again. The key things to remember are that SSDI, on average, pays more, but requires you have a work history and work credits. SSI may pay less, but it doesn't require that you have a work history or work credits, merely that you don't have a lot of earnings or resources. It's possible to qualify for both SSDI and SSI, but not everyone will qualify for both. Some people will only qualify for one or the other. And of course, both do require that you demonstrate through medical evidence that you are disabled. Now, if you or someone you care about is thinking about filing a claim for Social Security disability insurance benefits or for supplemental security insurance benefits, we highly encourage you to read some of the articles on our website that explain the qualification and application process. We also highly recommend that you contact a qualified specialist disability advocate, like us, for instance, to help you with your application, to make sure you have the best chance at getting approved. If you'd like to see if we can help you, please visit us at www.citizensdisability.com or call us 24/7 at the number on your screen to my left over here. We've helped hundreds of thousands of people with their claims since 2010, and no one in America handles more SSDI claims than we do. Now, I hope this video answered your questions about SSDI and SSI, and I hope to see you again in some of our other videos. So until next time, allow me to just say thanks for watching.